if you look at the interest rate side, well, with the CPI figures coming out last night, the surprise was really core inflation being sticky at 3.2%. So that's what takes, in our point of view, the 50 basis point cuts off the table next week. So there we in the camp of the 25 basis point cut as core inflation remains sticky. On the other hand, the focus is clearly on the labor market where the Fed has room to cut, where we expect a cut to come in next week.
So does the default proposition, does it remain in US equities, or are there better opportunities out here in high growth Asia?
It's a mix in between. If you look at if you look at the global market, it's still. If you look at the risks sentiment itself, it has been weak over the last few weeks. US is still the one providing the best growth. Europe, you see, it's kind of stalling a bit on the growth side, and Asia is still a bit waiting for the rate cuts to come in. So that's kind of a balance between you have better valuations in Asia. On the other hand, the rate cut cycle hasn't started yet. That's why we have a balanced view across all regions, where we see also broadening out in the US market, which is a positive sign, especially if you look at the S&P equal weight, which was able to make a new high compared to the normal S&P, which also shows that it is broadening, which is a positive sign on the markets itself.
Thomas, can I bring it back to Europe, and the ECB will decide on rates later on today. Do they need to drop their cautious stance given the stresses that seem to be building in the Eurozone economy, especially surrounding Germany? Are you concerned about what you are hearing from Germany, particularly from Volkswagen, which is such a giant of German industry? Now it's in a situation where it's talking about layoffs and plant closures.
For Germany, for sure, it is concerning that they are struggling at the moment. But on the other hand, what we also have to look at, especially for, let's say, like Volkswagen, it's also a bit a more isolated case, as Volkswagen is more impacted, as they're not so much into the premium segment compared to like a Mercedes. But of course, if you look at Europe is slowing, and the rate cuts, we expect that also to come in with 25 basis points today, plus we expect another cut in December to come in. So the ECB is moving, but it's not moving as dramatically as service inflation is still relatively sticky itself.